I don't know if this is going to be corporates pitching off to see who ticks the boxes to get into Roger's fund, or maybe we'll put it less crudely, we'll be sort of working our ways around some of the innovations and some of the great projects that are out there that are going to be solving or helping to solve this energy transition conundrum. And we can leverage some of the themes that we touched on this morning as well. But I just thought I wanted to start off with getting a quick introduction to the corporates that we've got up here. If you could sort of just quickly summarize your project and then put that into the context of, what's the sort of the need at the moment within the world for the metals and the projects that you're trying to develop. And Prashant, why don't we start with Volt? Let's get a quick overview of Volt.
Hey, good afternoon, gentlemen and ladies. My name is Prashant Chintawar. I'm the Chief Executive Officer of Volt Resources. We are a company listed on Australian Stock Exchange and we are very blessed to have two high-quality graphite assets. So we're kind of a junior miner. We have one of the world's largest graphite mine that's in Tanzania, that's under development and financing. And we actually also have an operating mine in a country that you probably never heard of, Ukraine. So that's a mine that's been in operation since 1934. But that's where we are and where we have been traditionally, but more importantly, where we're going. So we're trying to become actually fully integrated natural graphite anode producer. So if you were to look into your cell phone, Tesla, any kind of high-tech device, to tell you the truth, the kind of battery in it that is called lithium-ion battery, which is really the heart of electric vehicles. And although they're called lithium-ion, the reality is more than half the weight in the battery is actually graphite, a critical material. So we want to take the graphite coming from our own mines, either in Tanzania or Ukraine, and convert that chemically through this chemical processing into natural graphite anode material. So traditionally we have been and we will remain a graphite producer, but where we're going is to become a fully integrated natural graphite anode producer. Thank you.
Yep, excellent. Darren.
Well, thank you everyone for joining the panel. Darren Collins, CEO, Director, U.S. Critical Metals. As the name would suggest, we are focused on assets within the United States as a security of supply concern for the U.S. Specifically, our assets are a lithium asset in the Clayton Valley area. We're actually in the Clayton Ridge, similar to what you'd see within an Ioneer out of Australia. We are rare earths in the south of Montana. That is a high-grade asset that we've sourced there from the former head of rare earths at USGS, and then a cobalt asset in the Idaho Cobalt Belt that is right to the southeast of Jervois Global, who is currently producing from the only mine of its type in the U.S., where cobalt is actually a primary metal. Of course, cobalt generally a very small byproduct with production of other metals. So that is a little bit about our company, a little bit about myself just quickly. My background is in corporate finance. I started off with the group Quest Capital in Toronto, is currently Sprott Resource Lending. Worked in the UK for a mid-market investment bank for a couple of years and spent about the last 10 or more years of my career as an entrepreneur building companies. So thank you for coming and thank you for any questions that you might have as we go along.
Yep, excellent. And I'd like to skip you, Roger, just to hear from the other company in the room, and of course, Darren. Thanks, Darren. But we're going to hit the metals company, Craig, is a slightly different project. You wouldn't categorize you as a mining corporate as such, but I'll let you explain.
No, certainly. Well, look, I come from a mining background. I worked for Cliffs and the iron mines in northern Michigan, and also was on the finance side, and was working at a hedge fund for a while, trying to figure out where all of the cobalt and the copper and the nickel was going to come from for the clean transition. And our resource is unique, but it's really coming from the same sorts of needs that everybody's focused on, as you noted, with U.S. critical mineral supply chains. How do we make sure that we have the metals necessary for the clean transition, for EVs, for wind, for solar, the batteries that can store that energy? And what we are developing at TMC, the metals company, is 1.6 billion tons of these polymetallic nodules. These are nodules that form over millions of years off the seafloor in the Pacific Ocean. And there's this very specific patch, the Clarion-Clipperton Zone, that people have known about for a long time. And in fact, you had other companies like BP, Lockheed Martin, Shell, Sumitomo, who were trying to do this back in the 1970s, collect these nodules off of the seafloor. And they were mainly interested in the manganese. Well, half of the revenue from this nodule we expect would come from the nickel. It is 1.3% nickel, 1.1% copper, 0.2% cobalt, and roughly 30% manganese. So roll that all into nickel equivalents. That's a 3.2% nickel equivalent resource. For a metal that, the U.S. does have some lithium, the U.S. does have some copper, nickel's a really tough one. And pretty much all of the nickel growth would probably be coming from Indonesia. And that's already dominated by China with existing offtakes and existing investments. So we would position ourselves as a major alternative to that. And in fact, mining.com ranked us the number 1 and number 2 largest nickel projects in the world. So it's a very big needle moving resource from an unconventional source.
Yep, excellent. Interesting, and some real nuances as to how you're going to work on that project. And of course, Roger, just quickly to recap on your Global Energy Transition Fund, and maybe we could sort of hone in on, what kind of mining companies or natural resource companies would filter into your catchment for that fund.
Well, thanks, Adam. I would say that I probably should be sitting in the audience, not on the panel. Everything I know about graphite, I just learned from Prashant an hour ago. I'd say, as the investor's perspective, what we're trying to understand is where companies can make trade-offs around different materials, what geopolitical factors are going to impact on the development of these resources, how quickly they can come on stream. And the sorts of things I think about really are when people talk about something being scarce, how long that might be the case for, or how much capital it would take to unlock something. I think broadly speaking, so we focus on companies that are involved in transition. And the way that we think about it is they are agnostic to the tools that they use, and those tools may change over time as cost structures fall in certain materials or certain technology approaches.
Mm-hmm. Excellent. Yep. Well, let's focus on that strategic piece then, and sort of hear from the projects around, how these minerals are coming into play, and what sort of demand upside are you seeing? What sort of traction you're seeing from investors now with the metals that you're putting forward because of their sort of strategic importance, and how you overlay that. So in your conversations around capital raising, because with junior mining companies or small cap companies, so it's a difficult landscape out there at the moment to be out there capital raising. Prashant.
Yeah, I do agree that raising capital or financing these projects is not exactly easy. But having said that, I wouldn't really say it's impossible or difficult. So a couple of things have happened, especially when you look into Volt. So a few things that have been external, and I cannot really take any credit for it. Probably first and foremost is the Inflation Reduction Act that became essentially a law back in August of 2022. So that prohibits the use of critical minerals from 4 specific regions, 4 specific countries, especially China, North Korea, Russia, and Iran. So that essentially obviously also creates a localized supply chain. So these are huge drivers, huge tailwind for companies like Volt, which want to take the graphite out of our own mines in Ukraine and Tanzania and convert that into battery anode material here in US. So the US Inflation Reduction Act is definitely one thing. Secondly, the localization, which actually I would say to a large extent started even before the IRA. Because of the COVID, that also creates the driver for us. And last but not least, if you really look into the demand versus supply for the natural graphite, that gap exists today, which is very unique. So the demand exceeds the supply. And all the analysts in the market...
Batteries have gone.
All the analysts in the market are predicting that the gap will continue to grow. And obviously, if that doesn't grow, we will not listen to those analysts. So I think there are a lot of drivers, a lot of tailwind behind especially the graphite story. And that helps us. And we will be announcing those relationships as they become public.
Yep. Excellent. Yeah, it's an important point about the IRA, the Inflation Reduction Act, not just unleashing billions into this sector. It's also prohibiting supply from certain regions and areas and jurisdictions. Darren, how does that play into what you're doing with US critical minerals? You're obviously perfectly aligned for North America in that respect.
Absolutely. And it's great to see the US government, coming in with the Inflation Reduction Act and really stimulating an environment where investment into U.S. development of resources, reserves, various elements of the supply chain can come to fruition. I have a little bit of a chuckle to myself when I hear the words Inflation Reduction Act. I view it as a little bit more of the inflation causing act. Massive amounts of government spending put into the system is, really the definition of what causes inflation. And we certainly had a very large amount of that over COVID with these, various programs that were, needed in many cases. But, at the same time, now we have this situation where inflation is at a very elevated level. The solution to, control inflation is obviously to raise interest rates. But then I really enjoyed the panel this morning and, talking about these Band-Aids as it goes along. Oh, we have to step in to save this bank, or we have to step in and put a Band-Aid over this situation. And it really reminds me, and, going back to kind of the QE with the 2008 financial crisis, is we have to step in and, put all this new capital, all this new money into the system, which causes inflation as well. So, you keep on putting up rates. Yeah, banks fail. Okay, then you step in to fund these banks with new sources of capital into the system as well. So I think inflation is going to remain elevated. I think the Fed only has so many tools and so much ability to rein that in, and I don't think they're going to be able to over time. And obviously that's going to create an environment of inflated commodity prices. But, when I look at, the capital market environment, and coming from a finance background, there's no doubt that capital is the lifeblood of these companies. The solution is obviously improving economics on projects. So, it is a supply and demand driven market. As you see metal prices go up, the NPV and the IRRs of these projects improve. Certainly from, a development perspective, and obviously discoveries have to feed into, development and so forth. But, I think as those economics begin to improve and, presumably offset the cost of inflation on the actual operating and construction costs of these assets, you start to see more capital transition towards the industry. And, given again that there is a very finite number of companies that are participating within the space, the potential for valuation increases is substantial. That is, obviously a lot of other considerations around this as well. Supply of labor was one that was discussed quite extensively this morning. My 9-year-old son doesn't say to me, "Dad, I want to grow up to discover a mine." He says, "I want to be a hockey player or a football player or something like that." These perceptions of the industry and how people come into the industry, I think there has to be a fundamental shift in that as well.
Interesting. Just wanted to touch on, the valuation point was covered as well this morning quite a lot. And, you said there's substantial room for that to kick up with this thematic that we're talking about. But what are some of the real blocks or the sort of challenges at the minute in terms of developing a cobalt project in North America or a rare earths project? Is it the permitting? Is it this getting over this hurdle of being, I think it was again characterized this morning that we're going to have to accept there's going to be a level of industrialization and output required around that regionally you'll have to absorb. So are you finding that some of those things are harder to get across to certain investors, or it's sort of I'm just trying to work out what are some of the hurdles that you're finding right now in the development of your projects?
Well, I mean, the reality is it's a limited audience for capital. Okay. Within mining, whether that's public or private equity. My experience mostly in public equity. I think again that shifting of perception from what is an industry that's been around for thousands of years, pulling minerals and things out of the ground, to now trying to put social considerations around that, ESG. How do we do this in a way where the net social and economic benefit outweighs the alternative? Markets are efficient in the long run. I believe that, over time, again, the perception of the industry will change as we can communicate, what are the net benefits versus what has historically been the case.
Mm-hmm. Yep, absolutely. Craig, obviously, you have a different set of kind of sensitivities around what you do. And then also probably a completely different sort of narrative of how you communicate that to an investor in the capital raising. Obviously, the grade is fantastic in what you're finding. So you've got these different dynamics at play here. But talk us through some of those.
Yeah, look, you used the term perception a couple times. And for us, perception is at the front and center. First of all, what we run into is an awareness gap. This is a giant resource. It is the single largest source of battery metals on the planet. And within this little patch of seafloor, there's 3 times more cobalt, 1.8 times more nickel, a lot more manganese. It's a lot down there. But people hear the term deep sea mining and they think, I know what mining looks like on land. Why would one do that in the deep sea?
Alarm bells, right?
Yeah, and a lot of people don't necessarily think beyond that. But this is a project that actually, Benchmark Minerals put out a study, an LCA with third-party review last week, showing that you can actually reduce some of the worst impacts of, for example, nickel mining on land, where you're talking about 100 tons of CO2 or more for every 1 ton of nickel that you're pulling out of Indonesia. So the perception of this industry is one thing, and right now it's something where people hear about it and they think, well, I don't know, it sounds new, it sounds crazy, but it's really been something that has been developing for over 50 years. And we now are at the precipice of having that final mining code to allow us to be the first company to actually do it commercially. And we've done all of the tests. We've de-risked the offshore component. We've de-risked the flow sheet onshore. And now we're just waiting for that one extra jigsaw piece to fall into place. So I think perception is a tough one to change immediately. I think eventually, we'll win hearts and minds when people start seeing here's a battery passport with nickel from this source versus another. But what we're worried about now is just maintaining our cash balance and making sure that we can get to the point where we can show people this can be done responsibly and commercially. And then the perception, I think, will follow. Just like offshore oil and gas. If you go back to the 1950s, you weren't getting gas or oil from offshore, and then it became a third of the market quite quickly. And everything that sounds a little crazy then becomes commonplace when you look back on it 5 or 10 years later. And I think we're at that point in time for seafloor mining.
Yep, excellent. And you had some excellent results in terms of harvest, I guess, or yield, if you would call it that, earlier, was the end of last year.
That's right. We did the first integrated collection test of nodules. So this little rock that I showed here, we had 3,000 tons lifted from the seafloor 4,500 meters to the drill ship on the surface. And that sounds like a lot, but that would actually be less than 1 day of production for that ship. And we expect production at the end of 2024, early 2025. So that was big in terms of showing we can do it. And then onshore, it's actually something that behaves quite similarly to nickel laterite. So we have a MOU in place in Japan, and the Japan-US agreement from earlier today on, Section 30D and what that's going to mean for perhaps Japanese participation in some of those EV subsidies. I think that's good news for us as well. But yeah, it was a very good test, and now we have to analyze a lot of the environmental data that we collected at the same time, and then put forth our best application possible to the regulator.
Yep. I just want to sort of clear up as well that it's not some kind of big dredging device that's sucking up seabed. We talk about perception, right? It's a sort of an RV kind of vehicle that's doing things sensitively.
That's exactly right. And look, if you Google it and you look up deep sea mining, you'll see a lot of big, scary machines with big teeth and a lot of blasting underwater and drilling and digging. That's not what this is. This is a very specific type. It's not even really mining. It's more like collecting. So these nodules sit on top of the seafloor. So think of it as like a giant Roomba, picking them up and then transporting them to the surface. So it has a unique set of impacts. And of course, we have to make sure that we mitigate those and monitor them and do everything we can to minimize that. But at the same time, you're starting from a place where there's less life to begin with at this abyssal desert.
Yep.
And then what we're doing to actually collect the resource is very different than what most people think of when they hear mining.
Yeah. Who else is in this space? Who are you competing against at the moment? You mentioned you might be the first commercial operator if you get the licensing, but are there many other scrambling nations perhaps as well?
I hope you're sitting down, but China wants to do it, as one would expect. And they see an industry within critical minerals, and they think, okay, there's potential, and we'll get into it. And we saw China's English language state paper a couple of weeks ago note that they're going to step up investment. GSR is a Belgian contractor. Transocean just announced they're giving them a drill ship for future operations. Norway is looking in their exclusive economic zone, and Japan will be looking at rare earths in the seafloor mud about 1,900 miles off their coast. So there are a lot of very credible industrial nations that are pushing ahead, but in order for the regulator to allow you to move forward into commercial production, you have to do at least 3 to 5 years of baseline environmental work. We've done that. Nobody else has done that. So there is a built-in head start that all the capital in the world will not change.
Yeah. And thank goodness. Yeah, that's good to get that. Yeah, Roger.
Can I just ask a quick question?
Please, absolutely.
If this is all in international waters, how do you stake a claim to the asset?
Therein lies the interesting sort of legal question in here that when you go back to Lockheed or BP or Shell, some of the guys who were looking to do this in the 70s, it was kind of like the Wild West. So in international waters, a lot of people would say you could kind of do what you wanted. But the UN stepped in the 1970s and said, stop. All right, you don't have clean legal title. So the first step was establishing the UN Convention of the Law of the Sea. That was in 1982. 12 miles within your coast, the sovereign owns it, 200 miles economic rights. Beyond that's international waters. Then they established the regulator in 1994, and they allocated this little patch of seafloor into, at this point, 19 separate contracts. Most of the contracts initially were given to states like China, Germany, France. But for every contract they granted to those nations, they put contracts into a land bank that could only be developed by smaller developing countries. We partnered with some of those developing countries. So we have the contract itself, but then we would pay a royalty to those developing nations once we're in production. So it's a way that you can share the benefits of this with all of humankind without having it be dominated by just a few countries.
It's interesting. Yep. Just a question of perception then and sort of narrative, just to finish on that point, Roger, how is it when you talk to sort of LPs and people interested in your fund around what kind of constitutes an energy transition worthy company, and how does that change over time? Is that dynamic in terms of what is constituting a sort of credible and sort of meets all of the criteria company?
Well, I think one big idea is changing in the backdrop, and that is ESG's been a very big concept, the idea that you take into account environmental, social, and governance factors when you're making investment decisions. And it's really the environmental piece that relates to this conversation. Mm-hmm. The other two factors are kind of motherhood statements, where if you invest in companies with poor corporate governance, you don't get good outcomes anyway. So the investors have been doing that for a long time. But I think what's happening is, after an initial wave of focus on a highly prescriptive approach to environmental criteria, we're moving away from that. And the effect of ESG prescription, as you can see, the pushback in the state of Texas is, thou shalt do this and thou shalt not do that. And the effect of that is anybody who is in a high emitting business or an extractive business has been starved of capital as the money has been bifurcated, and that's driven up the cost of capital for these legacy industries. And oil companies are very afraid of talking about investing in their legacy operations because they fear that they will offend investors. But the reality is, and some of the names that you mentioned, like Transocean, the companies that are in these extractive industries have all the skills you need to be in these other industries, and have all the human and technical skills, and in many cases the customers, and they're operating in these regions, so they're extremely well placed to extend their operations into these new businesses. And the market values these new businesses at a multiple of their legacy businesses. And companies are starting to realize that if they change the perception that investors have of what they do, they can create value for their shareholders. And so investors don't need to worry whether the CEO cares about climate change. Investors only need to worry whether the CEO is interested in making money on their stock options, because these are value creating strategies.
Yep, absolutely, to put it crudely. Yep, excellent. I want to move on to the supply chain piece, and actually sort of this, how supply chains are sort of becoming regionalized due to the geopolitical influence that we've already spoken about, but then also how perhaps you as a mining company or sort of a natural resource development business are working with or looking at or speaking with a range of people across the value chain. And it could be something as simple as sort of, an EV manufacturer looking to get into mining now because they know that scramble is on for these essential minerals for their business. Prashant, maybe you could talk about it, because you obviously, you mentioned you want to be the integrated producer, and you've obviously got the refining capacity as well already with graphite, which is pretty niche within the sort of cachet of metals that we're covering here. Maybe you could talk a bit about that, the supply chain dynamics.
So broadly speaking, I would categorize that whatever is happening in the supply chain, localization, automotive OEMs really getting deep into the tier 2, tier 3, sometimes even tier 4s is actually a good thing, especially for companies such as Volt. So if you look at the conventional automotive OEM business model, most of them, not all of them, but are very accustomed to, very used to dealing typically with the tier 1 suppliers. But especially when it comes to electrification, electric vehicle supply chain, they're realizing by simply relying conventionally on the tier 1, first, they're not really grabbing the entire value of the supply chain. Number 2, they really do not have a control on the supply chain. So some of the savvy, sophisticated automotive OEMs, who shall remain nameless, are obviously getting into sometimes even mining, but definitely into chemical production, into anode production, cathode production. And you have seen these relationships being announced almost on a weekly or a monthly basis. So that is a good thing. So automotive OEMs, as opposed to saying, okay, we are a car company, we will continue to manufacture the car, they're now getting into battery pack production, they're getting into battery cell production. Some of them are creating these partnerships with POSCOs of the world in order to start producing this chemical called cathode anode production. These are actually all really wonderful things, and I think this helps both from small and public listed companies such as Volt to really have a broader view of the market and essentially have multiple opportunities to secure the financing.
Excellent. Darren, I know your projects are a little earlier stage, but equally, are you expanding the range of investors and corporates that you would be speaking with?
Yeah, absolutely. And have some general market commentary as well. But I mean, in our case, for example, on our rare earth asset in southern Montana, we're actually getting funding through Montana Tech from the U.S. Army Research Lab on that project. So, government entities, in addition to, industry participants, are obviously looking for sources of supply here. But in general, when I look at, kind of the largest market development, particularly in lithium within the United States, is GM's commitment to invest $650 million into Lithium America. You look at the way that deal was put together. It was a commitment. It was not hard dollars. The funds went into an escrow account. Okay. And then there was, a subscription receipt type agreement for the release of those funds. But really what I think that, that demonstrates is that, the source of lithium within the U.S. is, quite possibly going to come from claystone over the long term, that, Lithium Americas will likely be the first to take that from pilot scale currently to commercial scale, and in my opinion will result in a significant re-rating of the valuation of assets from clay within the United States, again being led by Lithium Americas. I expect to see more transactions of this nature within the U.S., specifically as it relates to clay assets, as that is advanced and built out. I could talk about the deal between GM and Lithium Americas. I've read it about 4 or 5 times, but some general commentary there.
No, it's good to have. Yeah, definitely. Craig, how about you and your conversations with the various investors, but also people within the value chain? How close do you work with them now?
Very close. And look, we want to be sort of the developers and I guess owners, for lack of a better term, of the asset itself, while subcontract out the actual collection and the processing. In terms of the potential customers, we've had a lot of conversations ongoing with battery makers, OEMs. And again, perception means there are a lot of people. It's like musical chairs, and there's one chair, and there are 6 people dancing around it, and the music's still playing. But there's such a large opportunity that I think a lot of people don't want to be the first one to sort of lock down an offtake, for example. Although we do have an offtake with Glencore for some of our nickel and copper as it is now. But I think what you're seeing across the supply chain is that there is a recognition that you have to sort of rethink the way the minerals are sourced here. And I think when you look at the IRA, for example, you look at a lot of other policy, whether it's US or Europe or beyond, there is a hesitation to take that last step to go from downstream, midstream, all the way upstream. And, when you see a lot of grants, a lot of loans that have occurred over the last year for various programs, DOE, LPO, for example, taking that next step to say, we are going to put the full force of the administration behind a recognition that whether it's in the U.S. or allies, you're going to need a lot more projects, and whether it's permitting reform, whether it's incentives, subsidies, there are a lot of things that can and should be done. But I think it'll take a while for that perception of this not being an ESG-friendly industry to change, but it better happen soon because the development timelines aren't getting much shorter.
We've just passed the half-hour mark. I guess we could wrap up there. Thank you very much, guys.